What's up guys, I'm back like I never left. In this video, I'm going to walk you through exactly how to use options to position yourself to make a significant amount of profit, and also how to use them if you want to hedge your current positions or your current portfolio. I'm going to be using Workhorse Stock and Hyliion Stock. I'm going to walk you through how to pick the right option prices, the right time frame expiration date. I'm also going to walk you through exactly the benefits of buying options and the dangers of that comes with it too. So make sure you stay to the end of the video. I'm going to walk you through in detail exactly the ins and outs of options. So now let's get right into the video. Alright guys, so before we get into the video, make sure you smash the like button. If you're new to the channel, make sure you subscribe. Have any questions or any comments, make sure you drop it in the comment section below, guys. So as I mentioned, I'm going to be using Workhorse Stock mainly because there's going to be a potential move that is going to be happening pretty soon within the next few months. I'm also going to be talking about Hyliion Stock and how to use options using that stock too. So Workhorse in the short term has a significant catalyst that has been coming out within the next 2 weeks. They're going to be reporting earnings in August 10 pre-market. So there's a lot of eyeballs in this company at this current time frame because they're expecting a USPS contract that is going to be announced pretty soon. Either they're going to get a $6 billion contract or not. So a lot of people are betting that the stock is going to go higher and anticipating a huge move that is going to happen pretty soon. So if you are somebody that do not have a lot of money, or you already use your buying power to invest in Workhorse Stock, and if you're not like ARK Invest, I made a video yesterday that they are loading up in this stock. Initially they had 190,000 shares, and as of yesterday they bought an extreme amount of shares, and they currently own 400,000 shares, a little bit above that. So they're loading up as the stock price decreases. So if you are not loaded like them, I'm sure you're not, and if you are too, that's great too, but you can use options to have the same amount of exposure and use the power options to leverage yourself to take advantage of Workhorse Stock in the short term when it dips. So if you believe that Workhorse Stock is going to go to the upside, you want to get involved in buying call options. So before I get involved and explain to you guys what options are, you need to have your options activated on Robinhood. That is going to be the platform that I'm using to explain to you guys in detail. As you can see, the options is set for my broker, so I'm going to be going over here to click on Trade Workhorse Options, and that is going to allow me to see exactly this page. So you need to apply for options on your brokerages, and you will probably going to get accepted, especially if you are going to be using Robinhood. So this is the first page that you're going to be landing. As you can see, there's a buy, there's a sell, there's a call, there's a put, and there's an expiration date over here. So as I mentioned, we are anticipating there's going to be a huge move coming pretty soon in the next few months. We did not know exactly the exact time frame where there's going to be news announced pretty soon. The options that we're going to be buying also needs to have a lot of time with them. So the expiration date over here, we're going to be looking for, since just to be safe, I'm going to be using the January 15, 2021 options that will expire at that time. So I believe the stock is going to go to the upside, so I'm going to be buying a call options. And later on, if you want to hedge your current positions, or if you're somebody that believe that the electric vehicle sector is just a bubble and you want to have a short position and you don't have a lot of money, you can definitely use put options. I'm going to switch you on later on, but now in the short term, we're going to be talking about the bullish thesis and the bullish swing trading opportunity for this specific stock. So as you can see over here, the stock price currently is $15.70. So at the right over here, you see the strike prices. So these are the numbers that you're looking at: 16.15, 17.15. These are called strike prices. And if you believe by January 15, 2021 that Workhorse Stock is going to be at $19, you want to buy this specific option contract. So when you buy one option contract, that is similar to having 100 shares of that company. So that is extreme leverage. That is fantastic if you don't have a lot of money. As you can see over here, you only need to pay $410 in return. If you actually, the stock moves to $19, you're going to pocket in the exact amount of money that you could have made if you held 100 shares of this specific company. And also, if you want to buy 100 shares at this current time frame, you have to spend at $1,570. So that is way below the price point over here. So you only need $410. So that's really fantastic, and that is one of the benefits of using options. So as I mentioned over here, now I'm going to be talking about how to pick the right strike price. So in order for us to do that, we need to understand and to look at how the price action of Workhorse behaved within the past few weeks. So as you can see, Workhorse stock hit a top right around $23-24 over here. So if there's a potential positive news that's going to be coming out in the next few months, we can anticipate there's going to be a retest of the price point over here. So what I'm going to be doing is I'm going to be looking at the strike prices that is closer to the resistance price point that we just watched. So we're looking at $23. So this over here that you can see on the right side, it says break even. So in order for us to break even and to make significant amount of money, the stock price actually has to hit $26.26 and be a little bit above that for it to make a significant amount of money. And how you come up with this break-even price point is you add the amount of money that you paid to the strike price. So for this specific one option contract that we're going to buy for 23 strike price over here, we are expected to pay $3.20. So you multiply $3.20 by 100, that's going to give you $320. That money is called premium. So you need $320 to participate and buy these options. And also how you get the break-even price point over here is you add $3.20 to 23. So 23 plus $3.20 is going to give you $26.20. So if I buy the 23, this is going to be the break-even price. However, as we looked at the chart over here, the strike price that we need to eventually buy is going to be the one that is closer to $23, because that is the resistant price point that we just watched from the chart. So I need to be super careful, understand that the options that I want to buy, I'm eyeing on the break-even price instead of the actual amount of strike prices for that specific resistance that we watched on the chart. So I'm going to be eyeing 1920. So just to be really safe and sound, I'm just going to pick the $20. So the $20 strike price, I'm going to be spending $3.80, which is you multiply that by 100, that's going to be $380. And the stock Workhorse needs to be at $23.80 by January 15, 2021. So we have a lot of time, and one of the important things that we look for when you buying options is that options 85% of the time they will expire worthless. So if this options that we bought for $3.80, if Workhorse stock does not go to the strike price of $20, if the stock doesn't go to $20, the amount of money that we paid is going to slowly be eaten away due to time decay, which is measured by theta. This is one of the Greeks. So you need to keep in mind that as time goes by and the stock does not make a move to $20, you are slowly going to be losing money. But however, as you can see, we picked an expiration date that is so far, that is really fantastic. So we don't have to worry that much about it. We need to really be worried about it if there's 30 days. If it's 30 days close to expiration, then that is going to be when theta really starts to kick in, and we need to figure out exactly if we can close out of our positions, or we need to figure out exactly how we can really hedge our positions by buying put options. So now let's move on and talk about put options. So put option is if you want to, a person that have a pessimistic view of Workhorse stock and you believe the stock's going to go down, or you want to hedge your portfolio. So if you have currently 500 shares of Workhorse stock and you bought it at $15.52 and you don't want to risk it because negative news can come out and Workhorse stocks might not get the deal and the stock will eventually crash. So if you don't want to have that amount of exposure to your portfolio of a loss, what you can do is you can go to your put options and you can pick a strike price that you believe the stock is eventually going to crash if negative news is going to come out. So I'm going to believe that the stock is going to go close to around $12.50 if things doesn't go out. The break-even price for this specific strike price is going to be $9.10. And how you calculate this break-even price is going to be you subtract the $12.15 minus $3.40, the premium that you need to pay. So you subtract $12.50 by $3.40, you will get $9.10. That is going to be the break-even price. So you buy this one, that is going to give you an exposure of 100 shares. So let's say that you bought Workhorse stock today at $15.70 and you want to protect your position, you want to hedge it, you can come down over here and you can buy the $12.50 strike price 5 contracts, which is going to give you the same amount of exposure to 500 shares. So your current position is relatively protected, and also the price is not that significant. So we're going to pay $3.40, which is $340. So that is what you're going to be using in order to hedge your portfolio. So now let's look at the other stock, which is going to be similar to Workhorse stock. There is a potential opportunity for this company to have a significant move to the upside or to the downside. So the merger date for Hyliion stock is approaching pretty soon. It's going to be in Q3 2020. So that is going to be around September. So the expiration date that we're going to be looking at, if you want to be risky a little bit, you can use the September 18, but just to be safe, we're going to be using the October 15. So we are going to be looking at the bullish thesis of this trade. So as you can see over here, the current price is $19.15, and how we can pick the strike price for Hyliion is going to be by looking at the chart. So the top that it made around over here was close to $34.90. So I want to pick a strike price that have a break-even price point that is closer to $34. So over here, as you can see, the $30 has really closer break-even price point to $34, which is $32.25, and then it only costs $2.25, which is going to be 225 cents. So this one contract that you're going to buy, it's going to give you an exposure of 100 shares. And if you're super bullish, if you want to load up on it, you can definitely buy 5 contracts, and contracts are going to give you 500 shares of this specific stock, that amount of exposure. And if Hyliion stock goes to $30 and goes past break-even price point of $30.25, you're still going to be making the same amount of money that you could have made if you had 500 shares of this specific underlying asset, which is Hyliion, which is currently trading at SHLL. So the other thing that you want to also be looking at is the further that you go out, the prices just go down, but also need to be super careful is the break-even also goes up. So the likelihood of you achieving this break-even price point is highly unlikely the further out you go. So that's why the price is actually cheaper. So that's why you need to be super careful when it comes to options. Sometimes getting or buying options that are closer to the underlying asset price, which is $20, is kind of relatively closer to the share of the price right now. That is called close to the money. So that is beneficial too. But however, as you can see, the price is relatively higher too. But you need to keep in mind the likelihood of the stock hitting $24.40 is higher compared to it hitting $41.55 in the near future. I'm sure a lot of people believe this Hyliion stock is going to go past that due to the merger. Of course, we'll have to just wait and see if that's going to happen or not. Now let's look at if you're somebody that wants to protect or hedge your portfolio, or if you believe, Hyliion stock is just hype and it's just going to be crashing if the merger happens, we're in an EV bubble. You believe that narrative, so if you don't have a lot of money and you want to short Hyliion stock, you can definitely use put options and you can come down to the whatever expiration date that you want to buy it to. So you can definitely pick for this specific case, we're going to be October 16, and you can buy these strike prices. So let's say that you're a person that is using put options to hedge your portfolio. So you bought you currently bought right at $19.15, 100 shares, and you want to protect your 100 shares in case the stock goes down. You can definitely come over here and you can pick a strike price that you believe the stock will eventually go down if things go south. So in this case, we believe that it's going to go down to around like $11. So we're going to be looking at strike prices that have break-even price points that is closer to $11. So I'm going to be picking the $12.50 strike price that is going to be expiring in October 16. I'm going to be buying it for only $1.28. So you multiply that by 100, that's going to give you $128. So just by buying that, you are protecting 100 shares that you bought today. So that is really fantastic. However, if the stock goes up, you're going to be losing 128 shares, and that is one of the downsides of hedging, but it's definitely a better and safest way to hedge your portfolio. That's why the main function and purpose of options that hedge funds and institutions use is to protect their portfolios. They manage multi-billion, multi-trillion dollar portfolios, and if they believe that there's going to be an economic turmoil and a pandemic happening, they can come and turn to options to hedge the huge amount of shares, the huge amount of portfolios that they have, and they are going to be able to spend millions of dollars and have exposure to a lot of shares of the companies that they own. And in case things go south, they are protected. However, if things doesn't work out, they're still going to lose the money, but they still have funds set aside for hedging purposes only. So if you're going to be trading just like them, just having this few portion of your portfolio allocated to hedging, it's really a great thing to do. So that is going to be how you can be using options. So an important thing that you need to understand when getting involved in options is 85% of the options that you're currently looking at right now, they are eventually going to be worthless. So that is one of the important things you need to understand. If the option prices, let's say Hyliion Stock doesn't go to $25 strike price at this expiration date, October 16, this strike, this amount of money, this premium is just going to go to zero. Time decay is going to eat it away, and the person that sold you this option is going to keep that money. So that is one of the things you need to understand that. So you need to be super careful. 85% of options expire worthless. So that is one of the huge probabilities that is against you when you are buying options. So be super careful. Only use it on options or stocks that is going to be able to move a significant move, and Workhorse and Hyliion Stock fit that criteria. That's why I showed you guys that specific example. And you can also make consistent money selling options too. If you want me to make a detailed video about how you can use options, how you can use different strategies to sell options and make a significant amount of profit, make sure you drop in the comment section below. And I did a challenge last year where I only used $50, and basically the strategy that I used was I was selling options because there's a huge amount of probability in your favor. As I mentioned, 85% of the time these options expire worthless. So I was able to grow my account from $50 to about $3,000 within like 12 weeks. And that was like a huge, like more than 1,000% return. And I documented everything in YouTube. So if you join a Patreon page, also if you join the Discord chat, if you request it, I'll definitely be able to send you all of that information because I made all this video. I recorded everything. It has a lot of detail about option selling, different strategies that you can use, and it's really for somebody that's like super interested because there's a lot of information in those videos. So if you're interested about getting that information, make sure you join the Discord, and if I can join it, the Patreon page to ask me about that content. So hope you guys enjoyed this video, guys. If you have any questions or any comments, make sure you drop it in the comment section below. And also shout out to Joe and Eileen for joining the Patreon page. I really appreciate you guys. And if you're the first 10 person to join the Patreon page, you receive a gift. So these two individuals received an awesome gift that really helped them a lot. So I'm really happy to help them in their journey, guys. So I'll catch you guys on tomorrow's video, guys. So have a wonderful day.